Ladies and gentlemen, good day and welcome to the Bodal Chemicals Limited Q3 and 9 months of FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankit S. Patel. Thank you, and over to you, Mr. Patel.
Thank you very much. Good evening, everybody. On behalf of Bodal Chemicals Limited, I extend a very warm welcome to everyone for joining us on the call today. On this call, we are joined by our CFO, Mr. Madhur Upadhyay. I hope everyone had an opportunity to go through the financial results and investor presentation, which has been uploaded on the stock exchanges and our company's website. We will give you a quick overview of the recent developments in the chemical industry and on our company, and then Mr. Upadhyay will walk you through the financial performance for the quarter. As per the industry highlights, inflation in major economies continues to be higher level than the normal, leading to lower purchasing power with mass, which results in lower consumption at end-user industries and lower demand for our industry. Certainly, uncertainty about the end of the war between Russia and Ukraine further deaccelerated the demand scenario of chemical industry. The two major markets, the United States and the Europe, have been slow due to multiple headwinds from rising inflation to uncertain geopolitical scenarios. Slowdown in China impacting the domestic demand in China, resulting in excess volumes originating from China. Most aggressive interest rate in US causing financial conditions to tighten, and recessionary trends continue impacting the demand. Industry expects gradual but slow recovery from here. As per the company overview, in today's environment where Indian suppliers are emerging as preferred partners globally, we have been able to leverage our leadership position. We are India's largest integrated manufacturer of dyestuff and dye intermediates and hold a meaningful market share in the world. Coming to the operational performance, during the Q3 FY24, revenue grew by 6% due to overall quantity gain, but margin remained constant. Though there was about 1 month annual shutdown of sulfur products division during the quarter for boiler inspection, etc., the company has achieved 3% growth on quarter-on-quarter basis. In revenue from operation is due to marginal improvement in demand for the quarter. This gives confidence that worst is over. During 9 months FY24, turnover is lower due to lower prices of raw material as well as finished goods. Total revenue of 9 months FY24 stood at 1,020 crores, a degrowth of 14% on year-on-year basis. Coming to the dye intermediate business, on positive side, in 9 months FY24, total revenue from dye intermediates stood at 307 crores, as reported growth of 19% on yearly basis, mainly on account of improved volume. H-acid and vinyl sulfone prices were near 435 for H-acid and 224 for vinyl sulfone in Q3 FY24. Volume has improved, however, margins are still under pressure due to lower realization. More than 40% of our intermediate products are used for the captive purpose to manufacture various ranges of dye stuff. Over the next few years, revenue pie from this vertical will eventually go down and business from dye stuff will increase in favor of steady business growth. Coming to our dye stuffs, 10% improvement in quantity produced in dye stuff on quarter-on-quarter basis is due to some improvement in the demand. Revenue contribution from dye stuff stood at 352 crores for the 9 month FY24. It is a degrowth of 20% on year-on-year basis. End application industries like textiles, leather, paper, other dye stuff consuming industries have not performed well during the last few quarters. Coming to our basic chemicals division, about 50% of our basic chemicals are captively used for dye intermediates. In this division, there was about 1 month annual shutdown of sulfur products division during the quarter for boiler inspection, etc. The company has achieved volume growth by 9% on year-on-year basis, and revenue stood at 87 crores. Coming to chlor-alkali business, post-upgradation capex, the chlor-alkali business has performed reasonably well in terms of production, achieved 25% growth in volume in 9 months of FY24 compared to the previous year. However, due to adverse market condition of caustic chlorine industry, revenue stood at 201 crores and has reported a degrowth of 18% for the 9 months. This is due to a substantial reduction in price both domestic and in international markets. Coming to the benzene derivatives, as highlighted in the earlier call, our main goal is to replace imports and capture business in the pharma and agrochemical markets. Currently, it is a bit slow in those spaces where PNCB and ONCB are consumed. Recently, on 29 December 2023, the company has successfully commenced the production of benzene downstream products at Saikha, Gujarat. This plant will generate further growth in revenue from diversified products portfolio with its installed capacity of 63,000 tons per annum. These being specialty chemicals will take time to stabilize, hence we do not expect meaningful contribution from it in the current year. The company from next year onwards expecting optimum capacity utilization and anticipating additional revenue of around 320 crores on a gradual basis. In spite of global headwinds in the chemical industry, all foreign subsidiaries have contributed some profit during the quarter. In a medium to long-term view, these subsidiaries will bring meaningful business. However, in the short term, we are expecting a modest performance. We have been moving up the value chain and working relentlessly towards diversifying the business from our core dyestuff and dye intermediate business to other specialty chemical products like benzene derivatives. We foresee demand for caustic soda to remain healthy from FMCG, textile and paper industries. Since very few players have a presence in North India, we have a competitive edge to a certain extent. Manufacturers and exporters in India are having a challenging time managing the overhead cost. Over the years, chemical industry has seen a transformation. Management is taking measures in terms of scale, cost, integration and cost cutting that will help sail through this tough time. Thank you, and now I hand over the call to Mr. Mayur Padia to walk you through the financial performance.
Good evening, everyone. The overall performance of the company has been muted for the quarter gone by. Our standalone performance for Q3 FY24 is as follows. Total revenue for Q3 FY24 stood at rupees 342 crore. EBITDA stood at 28 crore in Q3 FY24. Net profit for the quarter stood at rupees 72 lakhs. Our standalone performance for 9 months FY24 is as follows. Total revenue for 9 months FY24 stood at 1,005 crore. EBITDA stood at 84 crore. Net profit for the quarter stood at rupees 3 crore. Our consolidated performance for Q3 FY24 is as follows. Total revenue stood at rupees 343 crore. EBITDA stood at rupees 29 crore with a margin of 8.3 crore. Net profit for the quarter stood at rupees 98 lakhs for Q3 FY24. Our consolidated performance for 9 months FY24 are as follows. Total revenue stood at rupees 1,020 crore for 9 months FY24 against rupees 1,192 crore for FY23, 9 months FY23. This includes export of 29% and domestic sale of 71%. EBITDA stood at rupees 89 crore in 9 months FY24, a degrowth of 22%. Net profit for 9 months FY24 stood at rupees 4.4 crore against rupees 35 crore for 9 months FY23. Division-wise performance on consolidated basis for the 9 months FY24 are as follows. Dyestuff revenue stood at 353 crore. Dye intermediate revenue stood at 307 crore. Basic chemical revenue stood at 87 crore. Chlor-alkali revenue stood at 201 crore. Total production volume on standalone basis for 9-month FY24 are as follows. Die stock reported 10,545 metric ton. Die intermediate reported 16,009 metric ton. Basic chemicals stood at 1,53,295 metric ton. Fluor-alkali stood at 58,910 metric ton. With this, I conclude the presentation and open the floor for further discussion as well as question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Aditya Ketan from SMIF Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. So just a couple of questions. Sir, onto the caustic soda business, so we had reported a decent volume growth on quarter-on-quarter basis. But sir, why is it that prices of caustic soda, so what is the price band like currently caustic soda, it is consolidating at the lower end? And why this growth in volume isn't translating into the bottom line growth?
So compared to last year or last few quarters, caustic soda prices are at almost 2-year bottom, I would say. And since last 8 months, the ECU realizations have been lower than the previous few quarters. So meanwhile, when the prices increased couple of times in last 2 years, the reasons were there were shortages in the international market, mainly due to gas cut to Europe from Russia and all. So there was some imbalance in the global trade of caustic soda, and that resulted in some extraordinary demand and price increase in the caustic soda. But now, since last 8 months, the markets have been quite flat, and the realizations also have been quite flat. So we are operating at almost 80% utilization. We still have a room to improve to about 90 to 94% utilization. That should happen in the next 3 to 4 months. So going ahead, even at this basic normal prices, our margins can still be little better. And it is a cyclical commodity. So whenever the prices are good, we are going to benefit in good numbers.
Okay. So, sir, we all know that all the caustic soda units are generally situated in Gujarat only because of the availability of salt. So since the freight cost is also across the country, it is going up. So transporting salt from Gujarat to your place at Punjab, is that also eating up the margins for caustic soda?
No, actually speaking, our caustic soda business is doing better than even some of the competitors here in Gujarat. The reason is that it is a regional business, so no Gujarat supplier manufacturer is selling to UP or NCR or Punjab or Haryana area, not a single kg. We have started this business, acquired this business now almost 3 years back. And there is not been a single kg that was supplied from Gujarat to that area, to our customers. And that same way, we don't supply all the way down to Gujarat because the freight is very high. The product cost is around 30-35 rupees per kg, where the freight is around 5 rupees per kg. So because it is a big cost, it is not viable. So traditionally, even in our observation in last 3 years, yes, you are right that salt in Gujarat is around 1.5 to 1.75 rupees per kg, where the same salt, we take it by rack, in a train. So it is costing us around 3 rupees. So it is higher. But again, the finished good prices of caustic soda is also higher by minimum 2 to 3 rupees on an average. So it compensates because it is not only us, but it is also 3 more plants, in fact 4 more plants. There's one plant in UP of Grasim Industries, there's another plant in Punjab, another plant in northern Rajasthan, and another plant in central Rajasthan. These all 5 plants cater to the North Indian market. So I would say that the margins are similar to the Gujarat players, I would say.
So sir, this caustic soda price, so like any trend, like if you would like to share, so prices have bottomed out, or there is a chance that it might go up, or like for the next 6 months again we are witnessing stable prices only at these levels.
Going ahead, there are no signs of any great time to come. I feel, at least for next 2-3 months, there are no signs of any extraordinary demand that can come globally, which can end in a higher demand of caustic soda overall. And because it's mostly catering to the domestic demand, all Indian players, 20% goes into textile, about 20% in alumina, and then agrochemicals, pharmaceuticals, chemicals, and some miscellaneous industry. So overall, it's not a. There is also some imports. So in the western region, especially in Mumbai, last 2-3 months we have been observing regular imports that is coming from the Middle East. So that is another problem. Whenever there is a little room to decrease the prices in Gujarat area up to 35-37 levels, there is an import that comes in at around 33-34 levels. So that has been happening again since 2-3 months. So I think global slowdown is affecting, and I think going ahead it will remain flat.
Got it, sir. Got it. Sir, onto the dye stuff side, sir, already the industry is not in a very good shape. Plus, sir, when we look at the competitors, like one of the competitors, so that is Sri Pushkar, so they are also expanding into the dye stuff side, like they're setting up some new greenfield part for manufacturing some of the dye stuff. So like anyways, the industry is not performing. Plus, competitive intensity is set to go up. So what is the strategy of Bodal, like, how will we counter this?
Sri Pushkar has been present in dye stuff since I think more than 5 years now, and they may be setting up more capacities. But if I talk about the dye stuff industry from India, there are many players. It's not very limited number of players. And we, as most integrated, we definitely have the edge of the lowest cost, and us being present since now 20 years, we also have a great customer base, and all these subsidiaries are also supporting us, Turkey and China and Indonesia. So we do have a very strong model, very strong product basket. Also, we are taking within the organization some measures where we can cut down on the cost. Originally we have including our older units, we have many smaller units, which we have, strategically we have increased capacities in the bigger units, and we are planning to, stop some of the older units, which is already bringing our cost down. So to tackle this slowdown in overall business, we are working on cost-cutting measures, and it is already yielding good results for us.
But sir, when we look at the performance, like, so the performance like for the last 8 to 12 quarters is continuously that is going down. Even from the margin side, like some 10-11% margins for the last 2 years, now it is at 7%, and onto the bottom line, so like the net profit, sir, we were earlier making at least around 20 to 30 crore of profit. Now, so sir, we are standing at only 1 to 2 crore, sir. Sir, being the largest integrated manufacturing company present into wide spectrum of end user industry, sir, like the performance is deteriorating, sir, like on quarter basis. Any sense, sir, you would like to give how things will change from here on?
So last 6 quarters have definitely been affected, in a major way. Yes, you are right. The margins have come down from 12 to 7 odd percent. Net profit margins have come down to around 1 crore, 1 or 2 or 3 crores quarterly. You are right. So like I said, the Ukraine war, even again the tensions in the Israel area, the post-COVID destocking issue, there are many reasons, that affected us. Also, Chinese imports a few months back were very, very aggressive in the intermediate space. caustic industry has been, volatile. So there are many reasons why we have gone through this. But the encouraging sign for us is that our volumes are back. We feel that the destocking, which especially matters in the international part of the business that we do, destocking has really been happening last 4 to 5 quarters. And now I think the international normal pipeline volumes are there in the international pipelines of supplies. And I think that should, result in some improved volumes. That should result in some better demand than the last 6 quarters. We have already been observing this. I think our December and January numbers are definitely better than the previous 10 to 15 months. So it is definitely showing in the volumes part. Another reason that hit us badly was because of the Ukraine war. Many of the basic chemicals, petrochemicals prices were increased a lot. So when that happened, most of our raw materials, prices were increased, and we went through that phase for more than, I would say, 10, 12 months. So that also now most of the raw materials have been bottomed out. Most of the raw materials today are in the lower range. So that is also supporting us well. The volumes are supporting us well. Yes, the demand is not the best. We don't see the demand coming in a very aggressive way anytime soon, but it is at least better than the last few quarters. And also this new diversified benzene derivatives business that is starting for us, we are also hoping to, add more top and bottom line from there as well.
Got it. So just one last question, sir. Onto that Punjab unit incentive, so when that will start to flow, from which quarter?
It is not certain, but we are expecting from next quarter it should be available to us. But since it's a government matter, we can't claim confidently. But yes, process has gone to reasonably conclusive level.
And sir, what would be that quantum, sir, per quarter?
Per quarter, it can be 5 to 6 crore. And earlier period, rather from the period when we started the production, that is November 22 to till date, about 20 to 22 crore has already been approved that we have not yet accounted for in our books. So that will also be available.
Okay. Thank you, sir. Thank you.
Yeah.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Participant, you may press star and 1 to ask a question. Next question is from the line of Anupam Jain, who is a professional investor. Please go ahead.
Hello.
Yes.
What is the weighted average cost of debt here?
Weighted average debt cost presently is about 8.5%.
And incrementally, whenever this renewal will happen, is it expected to be happen at this rate only, or due to credit downgrade, is it likely to inch up?
It can jump by 0.5% because of the rating downgrade, but not more than that.
And when we are expecting a renewal of this, almost?
The renewal is at a different level for different banks. So over a period of, say, 6 months, it can increase to 9 to 9.5%.
Okay. 50 to 100 basis point almost, depending.
Yes.
This is like in the short term and the long term both there.
Correct. Both there. Yes.
And what is the gross debt and net debt that we have currently?
Currently, 550 crore is our term debt.
Okay.
And about 325 crore is a short-term working capital debt.
Okay. 850 something. So that is net, inclusive of all the cash and everything that we have.
Net will be about 800 crore.
800 crore. Okay. Are we looking for any non-core sale assets to reduce this debt currently?
Yeah, we are reviewing, but looking to the present scenario, chemical industry, we are not certain by when we will able to realize that. So there are certain assets we have identified, but by when it will realize, it is difficult to say at present.
Okay. So can I get the details of the assets and the quantum of it?
See, we have certain assets in Vatwa, Ahmedabad. Valuation can be around 100 crore. And as such, there is no longer future of this industry in this area because nearby residents has already come. So that is available for us to sell.
So it is a land with a factory.
Yes.
In Ahmedabad.
Yes.
Okay. And secondly, if you look at you are saying that we are going to have a revenue of 330 crore rupees more, as you guided in your commentary earlier. Next year. So we did almost a capex of 200 crore rupees this year, and we are projecting a capex of 390 crore more. Next year only.
No, next year there won't be any capex. So whatever capex that we will conclude in current year itself.
So for benzene, we will conclude this year only. That's what you're trying to say for 390 crore?
Yes, total will be completed within this year only.
Okay, and
most of the capex has already been done. Some of the payment are yet to be made. That is in the tune of about 30 crore, not more than that.
Okay. Last question will be from what can be here on we can expect any margins from in benzene side on the 340 crore rupees. I'm hoping that you're saying that we will get revenue from this category, not from the price hike or volume in terms of existing business.
So yes, from benzene we are expecting about 320 crore of revenue at the optimum level of utilization. And margin can be in the range of 12 to 15%. 12
to 15% EBITDA margin.
EBITDA margin.
Okay. Thank you. That will be all for me.
Yeah.
Thank you. A reminder to the participant to ask a question, you may press star and 1. We have our next follow-up question from the line of Aditya Ketan from Smith Institutional Equities. Please proceed.
Yes, thank you, sir, for the follow-up. Sir, onto the benzene derivative. So when will reach the peak utilization? By next year or in 2 years time frame?
To reach the peak utilization, I feel another 3 to 4 months we should be able to reach that level. We have already started the plants because there are international technologies and there is a lot of integration between all the plants. So it is taking us, we are slowly improving the utilization. So from the starting of the next year,
we can ramp up.
Yeah, so in 3-4 months we can reach about 50 to 70% levels, and maybe going ahead, if everything goes well, then following couple of months we can reach 80 plus levels.
Okay. And sir, this benzene derivative would account roughly around 25 to 30% of your overall top line when it reaches that peak utilization level. And since you are saying that the margins are better as compared to your traditional business, so what sort of margin trajectory you are seeing, from the current levels of 7 to 8%, can we move towards that 10 to 12% band of margin range going ahead?
So from our current 7-8% levels and another around 40 crores of EBITDA can be added. So that can take it up to around 10% plus. But again, these 7-8% levels that we have been performing since last few quarters, that is looking at last few years, that is the lowest that we have done. So I think going ahead, I don't think that our existing business will do 7-8% on a consistent basis. It will also have some improvement. At the same time, the new business will be added in the benzene form. So that is the whole idea earlier we were doing about 11-12% consistently. So the idea was to add traditionally higher EBITDA businesses and try to increase overall EBITDA to about 15% levels. But looking at today, because the businesses are slow, I think, our immediate target is to take it up to around 12-13% levels for the whole company.
Okay. And sir, since we are done with the CapEx, so for the next 2 years, the free cash flow would be used for paying off the debt, or we would be planning more expansion going ahead?
We are not planning any expansions as of now. Until the overall business performance doesn't improve, we are definitely not going to do any CapEx. So all the cash flows that will be generated, that will definitely be going towards repaying the debt.
So what is the debt position we see by FY26?
By FY26, our term debt will reach to about 350 crore, and working capital will remain more or less in the current level of about 300 to 350 level.
Okay. Sir, when we look at the textile sector, sir, I believe the cotton prices also they are declining, and most of the commentaries from the textile companies have been good or encouraging. So they are also stating revival of demand, and also some of the chemical companies also who are using dyes as a raw material, they are also stating that the demand is going up, or they are supplying to some of the dye players. But our numbers are not reflecting that pickup in demand yet.
So one of the reasons why our numbers are not better is, earlier we have been operating total 12 units. So when demand was better, the total units were operating, but when demand is low, most of the small units are not giving profit. So there is a fixed overhead burden for the company, which eat up the margin which is available for the company. So that's why we are gradually putting closer on smaller unit and saving on the fixed overhead that we have been incurring till date. So whatever correction is required, that we are taking. So gradually that will be available, and that will also add to our margin as well as bottom line. So fixed overhead that is playing a crucial role when company is operating at full level and the utilization is at lesser level. You can understand things better, I think.
Yes, sir. Okay. Thank you, sir.
Thank you. Participants, to ask a question, you may press star and 1. Anyone who wishes to ask a question may press star and 1 at this time. We have our next follow-up question from the line of Anupam Jain, professional investor. Please proceed.
Sir, you mentioned the 100 crore rupees. That is the land value or with factory value that is in Ahmedabad that you mentioned?
It is including all land, building, plant machinery, including all.
Okay, and what will be the land value?
It can be about 60 to 70 crore.
That will be the major part of that. Okay.
Yeah.
And we hope this deal to be completed in 1.5 year. I think so. In 1 year or 1.5 years, almost.
Yes.
And this will be utilized towards debt repayment, mostly.
Correct.
Okay. And secondly, you said FY26 number. I couldn't catch that number exactly. Was it 600 or 700 crore rupees? I couldn't catch it. 350 crore you said on term loan and 300 crore.
Similar, 300 to 350 crore on working capital level.
On working capital. Okay.
Yeah.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Ankit S. Patel for the closing comments.
With this, we conclude the call and would like to thank everyone for joining us today on this earnings call. If you have any further queries, you can connect to us. Thank you.
Thank you. On behalf of Bodal Chemicals Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.